Hey, welcome! If you've ever dreamt about retiring early, living off your investments, well, you've landed in the perfect spot. Today, we're digging into a fantastic analysis from the team here at Blueprint to Escape. We're going to tackle one of the biggest questions that investors face.
So, let's just get right to it. Is becoming a landlord really your best bet for financial freedom? I mean, for a lot of us, especially here in Canada, that's the dream, isn't it? Buy a place, get a tenant, and just watch those rent checks roll in. It sounds like the perfect retirement plan. But what if it's not? Today we're going to put that whole idea under the microscope and see if there's maybe a smarter, easier way to build your own blueprint to escape.
Okay, really quick before we jump in, just the standard disclaimer. Everything we're talking about today is for information and education. Think of it as food for thought. The team at Blueprint to Escape is all about giving you the knowledge, but this isn't financial advice. Always chat with a professional before you make any big money moves, all right? Let's get to it. So here's what we've got on tap. First, we'll look at the big retirement dilemma. Then, we're going to have 2 rounds of comparison, stocks versus real estate. Round 1 is all about the numbers. Round 2, well, that's the reality check. Then, we'll show you a truly passive alternative. And finally, we'll wrap up with your blueprint to escape. Sound good? Let's do this.
All right, let's talk about that retirement dream for a second. You know, the one we've all been told about? The old school thinking says that buying a rental property is the gold standard for building wealth. It's safe, it's reliable, and hey, it's something you can actually see and touch. But the real question is, in today's world, is that traditional path really the best blueprint anymore? Okay, welcome to round 1. For this part, we're taking all the emotions and feelings out of it. We're looking purely at the cold, hard numbers. We're going to put a rental property head-to-head against a stock market investment and see what happens over the long run. Now sure, both can make you money, but you might be really surprised by what the data actually shows.
So check this out. This chart tells a huge story in just 2 bars. Over the past decade, the stock market, we're talking the S&P 500 with all the dividends put back in, gave an average return of over 12.5% a year. Now look at Canadian real estate, just about 6.8%. That's not a small difference, that's almost double. And that gap, right from the get-go, is gonna have some massive consequences as time goes on. Okay, so what does that difference actually look like in real dollars? Let's say you started with 100 grand in both. Look at this. After just 1 year, the stock portfolio's already ahead by about $6,000. No big deal, right? But just watch what happens. By year 5, you're looking at a $40,000 gap. By year 7, it's over $70,000. This, my friends, is the magic of compounding. Your money isn't just growing, it's growing on top of its own growth. It's like a snowball rolling downhill, and it just keeps getting bigger, faster.
And here is the punchline. This chart shows you exactly where that snowball ends up. That gap that was widening year after year, it's everything. After 10 years, your $100,000 in the stock market is now worth over $326 grand. That same $100,000 in real estate, it's sitting at about $193,000. Think about that. We're talking about a difference of over $130,000 just from picking one investment over the other. That is a game changer.
Okay, so the numbers are pretty clear, right? But as the team at Blueprint to Escape always says, life isn't lived on a spreadsheet. There's more to this than just numbers. Real life is, well, it's complicated. And honestly, this is where the whole debate gets really interesting. And that brings us to round 2, the reality check. You know, everyone loves to talk about passive income when it comes to real estate, but how passive is it really? Let's actually pull back the curtain and talk about the hidden costs. And I'm not just talking about money. I'm talking about your time, your energy, your sanity.
So when you look at it, the case against real estate being passive really boils down to 3 things. First, there's the massive upfront commitment. I mean, it's a huge deal. You've got to find the property, get a massive mortgage, deal with all the lawyers, agents, inspections. It's a whole thing. Second, you've got the opportunity cost trap. All your money is tied up in one single asset that you can't easily sell. And third, there's just the ongoing grind, the day-to-day work of actually being a landlord.
And that ongoing grind? I love this quote because it just sums it up perfectly. The life of a landlord really comes down to 3 things: tenants, tax, and toilets. You're dealing with tenants, finding good ones, screening them, handling their complaints. You're dealing with taxes, navigating all the complicated rules. And yeah, you are absolutely dealing with toilets, and leaky roofs, and broken furnaces, probably at 2 in the morning. That doesn't sound like passive income to me. That sounds like a second job.
So if being a landlord is really just buying yourself another job, what's the alternative?
What if you want something that's actually truly hands-off? Well, let's talk about a different strategy, building a steady income portfolio.
And when you put them side by side, the difference is just night and day. As a landlord, your time commitment is high. Your money is locked up, you can't just sell a house tomorrow if you need cash, and the cost to even get started is enormous. Now, look at the portfolio investor. Time commitment? Super low. Your investments are liquid. You can sell them and have the cash in a couple of days, and you can start with whatever you have, even a small amount. It's a totally different universe of freedom and flexibility.
But look, I get it. Maybe you still love the idea of real estate as an investment. Maybe you really believe in property, and that's fair. The good news is, there is a way to invest in real estate without all the headaches we just talked about. A much, much smarter way.
And that solution is something called a REIT, a real estate investment trust. The easiest way to own them is through an ETF, which is basically a basket of these trusts that you can buy and sell just like a stock. So instead of owning one single condo, you instantly own a tiny slice of hundreds of properties, apartment buildings, shopping malls, warehouses, you name it. And the best part? They're all managed by pros, so you get all the good stuff, the rent checks, the property values going up, with none of the bad stuff. No tenants, no taxes, and definitely no toilets.
Okay, this brings us to the most important part of all, your blueprint to escape. We've looked at the numbers, we've done the reality check. So, how do you actually start building one of these hands-off, steady income portfolios for yourself? Let's get practical.
So here are just a couple of examples of the kinds of tools you can use. The team at Blueprint to Escape talks a lot about high-yield Canadian ETFs. Things like HDIV, for instance, which is built to give you super consistent monthly income from a mix of Canadian and US stocks. Or something like HYLD, which gives you a piece of the big S&P 500 companies, but is designed specifically to pay out a high monthly income. Think of these as the building blocks for a portfolio that's engineered to pay your bills.
And really, this is what Blueprint to Escape is all about. This explainer, it's just scratching the surface. If you stick with us and follow our content, you're going to learn step by step how to find these investments, how to pick them, and how to put them together to build a portfolio that can actually generate a high, steady income. A portfolio that's built for your financial freedom. Because let's not lose sight of the end game here. This isn't just about spreadsheets and stock tickers. The real goal is financial freedom. It's about getting to that incredible point where the money your investments make is more than what you need to live. That's when you get the ultimate prize, the freedom to decide what you do with your time every single day.
So I'll leave you with one final question to think about. I want you to take a really honest look at your own plan, your own blueprint. Is the path you're on right now buying you a second job? Is it buying you more stress and more headaches? Or is it actually buying you freedom? It's a big question, and the answer is everything.